Thanks for joining our breakout room. Not sure if everyone joined the last discussion we had with Veracus Bloom, but we talked about Nexus 101. So we're going to touch a little bit on that for maybe some of the new folks that didn't join. But as you can see today, we're really going to talk about how to calculate the right sales tax rate for every transaction. What we'll do too is we'll give just a couple of minutes, maybe maybe 30 seconds or so, so all the folks can join, and then we'll kick it off and get started. All right, it looks like we have everyone that's going to be joining. So quickly, I'll just introduce myself. My name is Parker Wilson with Avalara. Coming up on my 9-year anniversary in February. So been here since the acquisition of our exemption certificate management software, CertCapture. Would love to share kind of my tribal knowledge and sales tax expertise here with you today. Here's just a short agenda item or agenda for kind of what we're going to be discussing today. As you can see at a high level, we're going to be making sure that you are required to collect sales tax in the correct states, right? So understanding Nexus, we're going to talk through some specific sales tax holidays, some exempt sales, exempt status, things of that nature. Then also understanding sourcing rules, right? It's really important to understand the type of state that you're in, the type of sourcing rules that they leverage. So we're going to talk through that. Then applying the right sales tax rates, right? That's going to be the most important part or piece of this. And then kind of what technology and how to streamline the compliance. And then of course, get to some question and answers. So are you required to collect sales tax? Right, so it's a question maybe you're sitting here wondering. Really the thing to think about is back to kind of my original point is Nexus, right? If you have an obligation or if you have a direct connection to that taxing authority by way of kind of a plethora of ways, and we're going to talk through those here briefly, that would mean that you now have the obligation to collect sales tax in that particular state, right? So just the quick definition there defines the level of connection between the taxing authority, right? That establishes that obligation that you potentially have. And here are just a couple ways on how this can trigger or create these obligations. Oh, jump one too far. So these are just the types of Nexus that can be created. A lot of folks are really focused on economic Nexus because of the South Dakota versus Wayfair court case ruling, which kind of brought a lot of PR to sales tax as a whole back in 2018. But some of these other ways of creating or triggering that same obligation, right, or that need for you now to register and either collect sales tax or an exemption certificate are also some of these other ways, right? You see physical presence. These are things like housing product in a third-party warehouse, remote employees, even potentially 1099 employees or third-party contractors that are doing work on your behalf, even attending trade shows, right? So those are things to think about that trigger the obligation. Right, in blue there, you see economic Nexus, right? This was the court case ruling in South Dakota versus Wayfair, which gave you the obligation to collect and remit sales tax based on hitting a specific economic threshold. Click-through Nexus, right? This is one that that folks don't think about as much, but cookies on your website. If someone goes in, clicks on it, they use your software. Technically, I think maybe Massachusetts and maybe a few other states are the ones that have this, but you own the cookies, right? The tracking mechanism for your website. So if someone's on your website in a particular state like Massachusetts, you guessed it, as crazy or as weird as that can be, that could potentially trigger or create a Nexus obligation for you because technically you own that software or those cookies or that tracking mechanism there, and it's on their computer. So some weird ones, but in all honesty, that is one of the more stranger ones that we've come across, but that can trigger an obligation for you. Affiliate nexus, right? Having a co-ownership of another entity or another sister company, things of that nature, that can trigger these obligations. And then the marketplace facilitator statutes or laws that were put in place can also trigger nexus by way of owning or having some sort of marketplace. So moving right along, South Dakota versus Wayfair, right? It kind of added that additional layer of complexity when it came to sales tax as a whole. So as you can see here, on June of 2018, the U.S. Supreme Court issued the decision where they ruled in favor of South Dakota. They said, sorry, Wayfair, we think this is constitutional for them to put in place economic thresholds in the flavor of $100,000 or 200 separate orders. And this, again, added additional layer of complexity to the physical presence standard, which was in the Quill Corp versus North Dakota. Kind of like to say South Dakota's older brother, right? North Dakota. But that's what kind of established the initial obligation. I think that was back in 1992. So a lot of things have changed since then. And as you saw there, over 40 states have an economic nexus threshold. So all of the blue states, really every state, because the ones that are in gray are what we call the nomad states, just stands for the particular state names, right? New Hampshire, Oregon, Montana, Alaska, and Delaware. Alaska's a weird one because they have actually home rule jurisdictions, so they actually do have thresholds in place. As you can see that they're lit up blue. On the right hand side, you can also see kind of how these economic thresholds vary or differ. North Dakota, $100,000 in taxable or gross sales. So this can also apply to if you're selling for wholesale or resale. Kansas, $100,000 in sales. California and Texas, the larger ones, right? $500,000 in sales. Connecticut, $100,000 in taxable gross receipts, as well as 200 retail sales. And then Georgia, $100,000 in sales or 200 transactions, right? Notice the designation there between the and or the or. That can be very important when you're looking into or understanding your obligations. And then Alabama, also Mississippi, $250,000 in sales. Exempt sales are included, as you can see there in Alabama. So is it a tax exempt sale, right? Something to start thinking about as you sell into these particular states, right? Not only do you have Nexus and should you be either charging tax or collecting an exemption certificate, but also now, once you've established that you have that obligation, is the product that I'm selling taxable? Or is the consumer that I'm selling it to, based on how they're using it, does that make it non-taxable? Or the particular entity, right? Are they a government agency? Are they some sort of school or university? That can also create an exemption or make the sale non-taxable. So understanding if an exemption certificate needs to be applied or if the product itself is just non-taxable. Those are kind of some of the complexities that you have to navigate as you sell and as you understand and as your Nexus obligations increase. As you can see on the right too, kind of piggybacking on the economic Nexus thresholds, exempt sales, all of the royal blue are included. And then below that, we also see exempt services, right? So the designation between kind of just exempt sales as a whole and then exempt services, as you can see, the services are not as included as the exempt sales as a whole. But again, another layer of complexity, right, added to kind of the task of understanding or knowing whether products or services should or are taxable, or whether they are exempt, as well as adding to the thresholds as far as understanding your Nexus footprint. So with having exempt sales, understanding, is the sale for resale, right? So meaning the individual or the business entity that you are selling it to, are they potentially taking that product that you sold them and are they reselling it? So potentially not having sales tax applied to that invoice or order. And you guessed it, you would need an exemption certificate present to ensure that, right? This is kind of the insurance policy or what the state requires you to have to ensure why you're not charging sales tax. So the burden of proof would fall on you for understanding or knowing, hey, do I need an exemption certificate for this particular sale? Or is the consumer or the end user, are they responsible for that? So the next item we're going to talk through is understanding the different sourcing rules and kind of chatting through some of the different complexities that come along with each state and how they particularly source sales tax. So what is sourcing, right? So how or how does this apply to me? So what you need to look at or consider is the location of both the buyer and the seller. There's over, I think it's getting closer to 13,000 different taxing jurisdictions in the US. And there's 3 different types of sourcing. There's destination, origin, and then a mix of the two. And so with these 3 different types, destination would be based on where the product is being delivered or shipped to. Generally, what you're looking at is within one state. So if you're shipping out of your home state or out of state, majority of the time, it's going to be based on the destination. Some of these origin sourcing, as you can see here in the middle, this is going to be when the actual sale occurs within the state. So for Arizona, Illinois, Missouri, Mississippi, and so on, if the sale happens within Arizona, you potentially will be using the actual origin-based sourcing. So meaning where it's shipped from, you potentially be using that specific rate or that address as where you should be charging or using that particular sales tax rate. And then if it couldn't get more complicated, right, we also have mixed sourcing. So some of these states like Arizona, Missouri, Mississippi, the origin sourcing for the particular products and destinations can change based on the particular products or services. Whereas Ohio, the origin sourcing for products and the destination sourcing for services and digital products can vary. Just a couple of examples here. So in California, they are what we call a mixed sourcing. So depending on the specific county or jurisdiction where the product is being shipped from, you see here the origin sourcing is statewide. So we got the 6%, the 1.25% for the local, and the 1% for the city county. And then the destination generally is used for the specific district taxes. So this is something that someone internally at your organization or business would have to know and keep track of. And it can be quite the nightmare, as you can imagine. Texas, this is based on the actual place that it's coming from, right? So again, if the order is happening within Texas and being delivered within Texas, it can vary based on the particular percentages, just based on where it's coming from and where it's going to. And so having a system that's built into doing that properly and correct is kind of paramount to ensuring that you're doing it the right way. So again, kind of coming back to the same theme of making sure that you're charging the right sales tax rate. So calculating the correct amount, like I already mentioned here before, there's over 12,000 different taxing jurisdictions. So ensuring that you're doing this properly and correct, not only do you have to charge the right amount, you also have to keep in mind product taxability, like we just discussed shortly. Also the sourcing, right? How do I need to source this based on the particular product? How complex is the product that you are selling? Or hey, maybe you didn't even know that if the product itself or the service, whichever one is more, they call it de minimis, that potentially can change the taxability of them both if they're bundled together. So when we look at it from kind of the top view, understanding first what states you have an obligation in. Next, do I need to start charging sales tax for this particular item based on, is the consumer or the person that you're selling to exempt, or are they going to be doing it for resale? Then next, it's, is my product taxable, and how do I know, right? So understanding and keeping track of the taxability of your product after you've already discovered that, yes, I do have Nexus. No, the person that I'm selling it to is not exempt. So now I need to know, hey, what product or how do I tax this product properly? And so having a system in place built into your Sage system is what a lot of folks leverage the Avalara tool to do, and keep track of kind of the mundane task of understanding where certain products are taxable. So as you can see over here on the right-hand side in orange, we have broad tax services, the taxability of them: Connecticut, Hawaii, New Mexico, South Dakota, and West Virginia. And then narrowing it down, Alabama, Florida, North Carolina, Oklahoma, and Utah. So it can vary based on how broad or how narrow the particular product is that you're selling, and it can vary from state to state. And so when you are looking at the final taxability of the product, now it's, are we including all of the right rates as far as state, city, county, any special, local, stadium, or even potentially transit taxes that may apply? And did you use the right rates for those based on the sourcing rules? And so keeping up with these can be very complicated, especially in some of the more difficult states like California or Colorado. And then what a lot of people also look at is, did they over or under collect? Obviously, the state would love for you to over collect and remit more, but this is where maybe there could be some sort of friction between your customer and you, the business, because now you're overcharging them. Or if you have a savvy shopper, they may go to someone else because the price is cheaper based on them charging the right amount of tax and not overcharging them. So as you can see here, we kind of have a heat map of average sales tax rates, and kind of how they vary from state to state. And so you guessed it, we're getting kind of to the culmination of all of this. Sales tax is complicated. Why deal with it internally? Manage all of the different rules, rates, boundary information, know what the sourcing rules are from state to state. It's just not something that's going to add value to your business, but it's definitely something that you need to get correct and accurate. And so that's why Avalara is here. We're here to help outsource this, manage the entire process, repeatable, streamlined, and that way you can get this off of your plate or your finance team's plate, and you don't have to deal with this moving forward. And so as you can see here, kind of recurring themes around accuracy when it comes to charging the right amount of tax real time, when that invoice is created, so you know it's right. The efficiency around kind of reducing those costs, the time spent, so that way you can get back to doing revenue generating activities. We've even seen increasing customer satisfaction, right? So you're charging the right amount, you have the right tools set up to collect the proper documentation, It's in a place where you can run reports on, know you don't have to reach out multiple times. Next, the most important piece in my eyes is risk mitigation, right? So insurance policy around having peace of mind that it's being done correct, it's being automated, there's no error prone nature to it because you're taking the human intervention out of it. It's a software as a service that'll be doing this and always updated real time. And then also working and growing as you grow your business, right? Being able to scale depending on how small you are now or how potentially large your aspirations to grow are. We can certainly work with you at any stage of your business. And then next, we wanted just to briefly kind of outline or show really what the solution looks like, just as kind of a short diagram here. So as you can see, we have the happy orange cloud there that is Avalara. It's going to be directly integrated into your ERP, shopping cart, POS, whatever system you're utilizing or leveraging to apply an invoice or order, and where sales tax would need to be charged. Once that happens, automatically we're applying the proper rates, rules, boundary information, looking at the taxability of the product, right? In addition to looking at, is the product exempt, right? So having that connection to the exemption certificate, if that may apply, not applying tax to that order. If there isn't an exemption certificate present, we're pinpointing that address on a map, pulling in state, city, county, special, local, stadium, or transit taxes that may apply, and applying that as a line item there on your order or invoice. And it's not going to be slowing down your current process. It happens in under a sub-second. If an exemption certificate is present, obviously we will not be applying tax, or if one does need to be present or applied, a solution or automation tool is also there right at your fingertips to be able to collect, maintain, validate, really ensure that you have one on file. And if you need to, also request one to gather them from your customers. Because we have all this data in detail, we then also have the ability to file your sales tax returns. So not only can we calculate the proper sales tax real time upfront, we also can manage the life cycle of those exemption certificates. And then on the very end of this, the handle, the treasury, the remittance, and the actual filing of your sales tax return. We also have a little pinwheel because everyone really focuses on Avalara being kind of the sales tax calculation engine or provider, which is our bread and butter, right? But we also have other additional tools that we can offer folks that maybe are exempt in nature as far as managing those exemption certificates. We've also worked with Sage to provide a distribution bundle, depending on how many exempt orders or exempt invoices you're dealing with based on being a manufacturer, distributor, or whatever have you. So other things to think about is if you're dealing with licenses, right? So I already kind of talked about those first three starting from your left on this pinwheel. Next, we have the license management. So if you're dealing with like trucks or permits, if you have to get a license for your employees based on being on a specific job site or doing any type of breaking ground or work or anything of that nature, that while it is a niche, there are a lot of businesses that have a need to keep up with those. And boy, if you are, you know how big of a pain it is. So we actually have an automation tool to help manage those. When you see the fiscal, just keep in mind that we're actually handling the full remittance for your business as well. So one lump sum cut to Avalara instead of having to cut multiple checks to different states. It's just one ACH pull, and then we pay all of the proper jurisdictions on your behalf there with the returns filing tool. And then lastly, but not least, is our insights, or what we call the Avalara research tool. It's what I like to call the sales tax Google. where it can help you with determining how you should be charging for real property if whatever you're doing is being installed, or managing, hey, how is this taxed properly, getting that on the front end as far as understanding that, and it all comes back with expert level guidance where we can assist you through that process, provide you with the proper documentation, and we stand behind that for an audit as well. And then next we had just a quick quote here. I'll just read this briefly. So we learned some new things about our Arizona tax returns after Avalara started filing them for us, how they use location codes versus how we had been using them. And whenever we've seen a discrepancy in the tax rate, Avatax had turned out to be correct, which surprised me pleasantly. So that's Joe. I'm not even going to try to say his last name because I know I will butcher that. He was a corporate controller at PacCon. So as the doctor, the sales tax doctor that I am, prescribing next steps right here, we have a basic assessment that's free on our website. We highly suggest you take a peek at that. What that's doing is it's really looking high level for economic nexus. So we also have those thresholds on our website as well you can take a peek at. What we would suggest is if you do have questions around where you should be registered, product taxability, always consult your local sales and local tax expert or CPA. But also keep in mind that Avalara has those folks internally on our side, and we can perform a full assessment where we'll do in-depth evaluation of economic nexus, physical presence, where you have those obligations, and then we'll actually walk through the actual findings of that with one of the directors of our professional services team, both of whom we've added a couple new folks, but they have over 60 years of expertise throughout just two of them. So a lot of expertise goes into kind of knowing and keeping up with rules, rates, boundary information. It's all built into our tool, but knowing where you need to be registered is kind of the tip of the spear or the tip of the iceberg when it comes to sales tax. And so we have a service there, $4,500 for that. And so again, feel free to reach out to Avalara directly, or your specific person there at Veracruz Bloom, and they can get you in contact with the correct folks here at on the Avalara side. So that's really all we wanted to share with you today. I know it was a lot of information. Hopefully your head's not spinning too fast. If anyone has some questions, please feel free to put them in the chat. We're happy to help field those here when we have kind of a few minutes here to spare. So we got one here. It says, what states have you seen that are being more aggressive in going after businesses for audit? In all reality, we haven't seen businesses that are more aggressive per se. What we have seen is more states have added auditors. I mean, as you can imagine, California, one of the more aggressive ones, if I were to say that one is aggressive. But something to think about is the actual tax rate and how high the potential tax rate is in a particular state. Because not only are you due the sales tax, but the penalties, the interest, and the fines. And so based on the penalty rate for that state, that can add a lot to that bottom line based on where you're having an obligation or a need. And so doing that risk assessment is going to be important for your business to understand which states you need to look at, because the risk assessment will come back and say, hey, you have Nexus in 5 states. So those are the only 5 states that you would need to really worry about as far as where you potentially have obligations. So not necessarily states that are more aggressive, but what we are seeing is larger companies that smaller businesses are dealing with are being audited, and they're seeing, hey, why didn't XYZ company charge you guys tax? and then they'll go straight to them, and then potentially audit you for that. If you don't have an exemption certificate present, that can potentially become a large issue. As well as these states also talk to each other. So if you're audited by one state, there's conglomerates based on kind of the Northeast, the Southeast, the Midwest. All these states kind of talk to each other. So hopefully that was helpful there. Another question we have is, how can Avalara help me as an accountant who files sales taxes for my clients? So we actually have a solution or a platform as a service where we call it Avalara for Accountants, go figure, where you can leverage our filing tool to help file the sales tax returns for your customers. What I would highly suggest though, Catherine, is making sure that you're that trusted advisor and that your clients are registered in the correct states. I can't stress enough, in my previous roles when I was working with accountants and they would bring a customer to us, we would do a risk assessment or a Nexus study for them. Come to find out, they should be registered in 15 to 20 additional states. As an accountant, are you going to be wanting to do that for 30 clients? I kind of doubt it, but if it's part of your business model and kind of recurring revenue for you, more power to you. And we also have a tool to do that. Otherwise, it might make sense for you just to get a referral to recommend them to Avalara and that they manage the system themselves. So we got a question here. Do you recommend requesting a sales tax exempt certificate every year for those that you know are resale? So first of all, do you have Nexus in that state, right? Then, is that customer exempt for resale? Yes, we would highly suggest having a certificate on file, but then you would follow the guidelines of that particular form. Not every form you would need a certificate every year. I think it's just Washington State and Florida. What we would suggest in the ones that don't expire, like Texas and a few other states, is you get a new one every 3 to 4 years or even 5 years. Because if the business if they go out of business, if the person who signed it changed their name, or excuse me, the business changed their name, or the person signing it left the company, that can make that certificate invalid. And so keeping up with gathering a new one 3, 4 years, generally that's kind of a good rule of thumb. So not necessarily every year you would need to collect a new one, but definitely every 3 to 4 years if that certificate never expires. Otherwise, leveraging a solution to help track the expiration date and getting a new one, that's what our exemption certificate management tool can potentially assist you with. So as far as how to determine economic nexus, are you using bill to or ship to? You're going to be using ship to. So that's how sales tax is determined for the most part, right? We kind of talked through some of the sourcing rules where that can vary, but generally that's within the same state. So if you're shipping out of state, it's going to be ship to location based on deriving or understanding that economic nexus threshold. Great question there. Don't be shy. There's no dumb questions. It's only the dumb ones are the ones you don't ask. So feel free to ask any questions you got. We'll wait a couple more minutes if anyone else wants to ask some particular questions. Also, again, if you do want to set up just a consultation, it's more than likely going to be with myself. So feel free to reach out to the individual at Vracus Bloom, and they can make that introduction, and we can certainly chat through it if you have additional questions. So we'll just give a few more minutes for anyone that's working on maybe a question or thinking about something. Otherwise, give you a couple minutes back in your day. Really appreciate y'all joining us. Really appreciate your time, and hopefully you got some good information out of this at the very least. And so we're happy to help you understand your Nexus obligations if maybe this left you with some question marks. So feel free to reach out to your Vracus Bloom representative. They can get you in contact with us, or we can have them send over some details happy to cater something particular to maybe the questions that you have or anything particular. We can put that together for you as well.